Hello, welcome to the European Open briefing for Wednesday, February the 1st. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So the main news is this morning is that fallout from comments by President Trump and his trade advisor on the currency manipulation, or allegedly currency manipulation by Germany, China and Japan yesterday. That led to quite a bit of a sell-off for the US dollar. Markets are steadier this morning, and that came after the dollar slide halted at around 112 yen, and that led to a bit of relief in Asian markets that those remarks didn't trigger a much deeper slide in the US currency. Coming up later today, we have, of course, that FOMC decision. The FOMC started their two-day meeting yesterday, and they will announce their decision later today. So that's going to be pretty much on traders' minds, and will likely lead to some cautiousness ahead of that decision. In terms of the market movers, the main mover apart from the dollar was the New Zealand dollar, which came under some pressure earlier today following weaker than expected unemployment data. So let's begin with the US dollar, and here we can see the chart against the yen. The dollar sell-off was in two stages yesterday. First, we had those comments by Trump's top trade advisor, Peter Navarro. He said that he was mostly critical of Germany, and he pretty much killed the idea of that transatlantic deal between the US and the EU. He accused Germany of using the weak euro to gain an advantage over both the US and other EU countries. His specific words were that implicit Deutschmark that is grossly undervalued, and of course Deutschmark he was referring to the Deutschmark rating within the euro, and of course the euro is being weighed down by weaker eurozone members, although Germany of course is benefiting from the weaker periphery countries to have a large trade surplus, which the US is not happy about. And then the war of words continued by President Trump. He accused China and Japan of currency manipulation, and in his own words he said that both countries play the money markets and they play the devaluation market, while the US is doing nothing about it. The dollar slipped to 2 months low of 112.07 yen, so it's currently trading around 113.50 yen this morning. So there's been a significant rebound since that 2 months low. Moving on to the dollar index, the dollar slide was broad-based against all major currencies. The dollar index fell around 1% yesterday. It hit an 8-week low of 99.43. We can see that the dollar index, that was the lowest since December the 8th. In terms of treasury yields, they've been providing some support to the dollar. Treasury yields, although they did fall yesterday, the slide was kind of limited. Treasury yields, 10-year yields were roughly steady around 2.45%, so that provided a bit of a support for the US currency. And of course, as mentioned, we've got the FOMC meeting coming up later today. The announcement is at 19 hours GMT. Expectations are that the Fed will hold rates at the current rate of 0.5 to 0.75%, although there will likely be scrutiny of the Fed's announcement statement, where the Fed may signal a possible rate hike next month, or at least to see whether or not Trump's policies are having some impact on the outlook of Fed policymakers. Moving on to some Asian data that we had out this morning. We had the final PMI reading for Japan's manufacturing PMI. It was slightly revised down from 52.8 to 52.7, though that figure is still it's a near 3-year high. In terms of export orders, Japanese export orders were at a 12-month high, and that pretty much supports the Bank of Japan's updated outlook yesterday following the Bank of Japan policy meeting, where they revised up their growth forecast for the next 3 years. We also had Chinese manufacturing PMI, where the manufacturing activity stayed above 50, the expansion level for the sixth straight month. The PMI did fall slightly from 51.4 to 51.3, although it's still comfortably above the 50 level. So all of that pretty much contributed to that slightly positive risk sentiment in the markets today. Moving on to the New Zealand dollar, there was some disappointment from the jobs data out of New Zealand. The unemployment rate jumped from 4.9 to 5.2% in the last quarter of 2016. Jobs growth slowed from 1.4 to 0.8%, while wage growth was fairly muted at 1.6% year on year in the final quarter of 2016. And we can see in orange here in the chart, the Kiwi dropped from above around 0.7345 to around 0.7270 currently. The Australian dollar also fell a little bit. We had a drop in the AIG manufacturing PMI in Australia, which dropped from 55.4 to 51.2 in January, although the Aussie has rebounded a little bit since then. Another commodity currency now, let's have a look at the Canadian dollar, because the Canadian dollar spiked up rather sharply yesterday. Here we can see the USDCAD dropped to below the 1.30 level, to a 4.5 months low of 1.2968. Canada's GDP did much better than expected in November. It grew by 0.4% versus forecasts of 0.3%. And we also had an upward revision to the previous month's figures. So all of that created a much more optimistic outlook for Canada's economy. And that pretty much reduces the chances that there will be another rate cut by the Bank of Canada anytime soon, and all of that is supporting the loonie. Although since the dollar has started its rebound, we can see the USDCAD has also ticked higher as well. Let's have a quick look at the euro and the pound before we go, because both currencies were vulnerable to the dollar's moves yesterday. The euro was rather volatile yesterday. It fell sharply and before rising. We had rather positive inflation and GDP data out of the Eurozone yesterday. But it was quite significantly impacted by those comments by Trump's trade advisor. The euro hit an 8-week high, $1.0811. It's currently trading just below that level. Of course, any trade decision by Trump administration that would impact the Eurozone will likely create further volatility for the euro. On the pound, on the other hand, did come close to reaching $1.26. It's trading around 1.2575 this morning. The British MPs yesterday began debating Article 50 in Parliament. There will likely be some amendments to the government's bill that would authorize Theresa May to trigger Article 50. Although even if we do see some amendments, the majority of MPs will likely approve that bill, given that it was voted for in a referendum. We should keep an eye out, though, for manufacturing PMI out of the UK later in the day. Looking at today's economic calendar, we had the final PMIs out of the Eurozone from Germany and France. Later, we're going to have the manufacturing PMI for the Eurozone as a whole. In the US, we've got the ADP national employment numbers. That's usually seen as an indication for the non-farm payrolls. That's due later on Friday. We've got also the ISM manufacturing PMI out of the US, and of course the Fed's decision as well. That's it from me. Thank you very much for watching, and have a great day.